Good morning, Jags. This is Fahad. Today is Wednesday, January 6th. Let's get started. So if you look at the S&P or the overall equity market futures this morning, you will notice the same continued wide bifurcation that I highlighted in Telegram last night. The Nasdaq, which is where all the growth stocks are, pretty much, the Nasdaq futures are down 173 points right now. This is a Nasdaq futures in front of you. Take a look at the overnight price action. Non-stop selling, aside from just the last half hour or so, a little bit of a bump higher. But at one point, Nasdaq futures were down more than 300 points in the overnight session. They basically gave up all the gains from yesterday. On the other hand, complete opposite picture when you look at the small and the mid caps, the Russell 2000 index. When those Georgia election results started to come out, and we started to immediately see that the Democrats are going to potentially take the control of the Senate. We still don't have we have one of the two races decided. The other one is still pending. We don't have the results yet. We immediately started to see the small caps basically started to rip higher, and they're still near session high. 2.3% rally in the Russell 2000 index futures in pre-market. So what does this mean? This means the exact same playbook that I gave you all in webinar yesterday is exactly what's in play. So take a look at this. We talked about metals and mining and construction and infrastructure and all those things. So FLR, flour, it closes 1686. It's going to open at 1750. It's bid at 1735 to 1750 in pre-market. Similarly, take a look at Tech Resources. It closed at 1956. It's trading near $20 in pre-market. US Steel, take a look at this. US Steel is higher by 7% in pre-market. After closing at 1820, it's going to open at 1910. Alcoa, same exact thing. The metals and mining space closed at 2367, going to open at 2433. So this is all the metals and miners, and there's more. Carpenter Resources, CRS, and many so. On the other hand, same exact thing is happening in the oil patch as well. So Halliburton is going to gap higher by about 2% in pre-market, closed at 2041, with the bid now in pre-market at 2080. Similarly, Continental Resources is up about 2%. EOG Resources is up about 2%. PXT is up about also about 1.5% in pre-market. So all of these stocks, despite crude oil is now being flat, holding steady around $50 per share, all of them getting higher. This thing is going to spill into the construction and the infrastructure theme as well. So many of the names that benefit from that, they're going to be catching bids. This is what Russell does. You could have a whole section of the market, which is the technology sector, that can continue to underperform, with reopening themes coming back gradually, and the fiscal side of the stimulus, which will be dominant under a Democratic regime focused on supporting small and medium-sized businesses. You could clearly anticipate the money will gradually continue to rotate out of the growth names in the Nasdaq, where the valuations are extreme still and gradually deflating, and go into areas and spots where there is money to be made, where we are seeing growth rate go from deep negative to flat to highly positive, with easy year-over-year comparisons during the first half of 2021. That has been the message that I have been giving you with rotation from growth to value for the last 6 months, and it just continues to accelerate in that direction. And that's exactly what we discussed in webinar yesterday once again. So these are the spots where it's easy to make money. Now, with that said, I do want to just quickly highlight one important news. DraftKings and PENN National Gaming are going to be in play today. Take a look at DKNG in pre-market. This thing is higher by about $2.40. So on a percentage basis, it's rising by almost 5% in pre-market. And similarly, PENN National Gaming in the last half hour or so started to move higher. And the reason for that is Cuomo, New York Governor Cuomo, is going to provide next week on Monday, he is going to provide state of the state address. So just like you may be familiar with the presidential address called State of the Union address, which usually happens in February each year. Well, in the state of New York, the governor provides similar kind of address, and it's called State of the State address. That's scheduled for next week on Monday. And this morning, the DailyNews is reporting that in this message, Cuomo is going to fully embrace mobile sports betting in this address. He's going to lay out the groundwork, how he needs to expedite this, the sports betting, the legalization process, as soon as possible. This is largely because the state is suffering $75 billion shortfall gap, the budget gap that needs to be filled. A lot of that money is expected to come from various kinds of federal programs with the stimulus and such, with the state money coming in from the federal programs, but they still have to be able to raise tremendous amount of money on their own, with the economy still mostly shut down over there. So this is the spot that they're going to go to. Also, similarly, you're going to likely see today marijuana stocks are going to rally sharply. So keep those in mind with the decision that came out from Georgia yesterday. So I'm expecting, for example, GRWG. You can see this thing is spiking higher. It's up about $2 in pre-market. Just yesterday, Jay presented an article on the homepage, HFYM, I expect, or HYFM, I think. Yes, Hydrofarm. So take a look at this. This thing closed at 60 and it's already gapping higher at 63. So up 5% in pre-market. And Jay just presented the bull case on this yesterday. And similarly, you can just go down the list, CURLF. Look at this. Close at 30. This is up 10% in pre-market. And then the last one which we have covered multiple times, if Village Farms, VFF is the symbol. This is up 15% or 12%, I should say, in pre-market. So these names also benefit from a under the Democratic regime, because there will be expedited legislative process to legalize marijuana essentially at the federal level. That could likely happen under Democratic regime rather pretty soon. And given, just like a sports betting right over here, given how these states are suffering and they want more money, they have to be able to raise tax revenues with the shutdowns and such. This is another spot, marijuana and sports betting, where they're going to go to raise that capital. So watch these names. They are going to be in play today, along with the entire Buy America, Build America theme stocks, which is your metals and miners, and as well as the energy complex. So just a high level view here. That's it from me, Jay.
Morning, everyone. So a couple items to talk about today. First off, retail in general. Next week, the ICFR Conference is going to be kicking off on Monday. In fact, I had posted a link of all the presentations that are going to be taking place. Okay. And I think what's different this time around is not only are you going to get retail names, but you're going to get some healthcare names. You're also going to get a bunch of cannabis names. So Grow Generation, Hydro Farm, Village Farms. But the reason why I'm bringing this up today as more of a preview is because last night, Stifel was out with a couple notes. And they were basically highlighting two specific retail companies. Number one, Lululemon. They say ahead of scheduled meetings at the ICFR conference, Lululemon is not going to be presenting, rather they're just going to be meeting with analysts. But ahead of those meetings, Stifel expects Lulu to have a positive pre-announcement. They expect Lulu results again to look exceptional against otherwise underwhelming consumer holiday spending for apparel and footwear. And then secondly, the other company would be CROX. The same thing. CROX is going to be presenting on Monday, and they are going to meet with analysts. And once again, Stifel saying they expect CROX to have a positive pre-announcement. So these were the two companies that Stifel was focused on last night, saying that they will have positive pre-announcements at the event.
Interesting stuff. Of the two, I'm still most interested in Lululemon. Mainly because I continue to believe that mirror business that they acquired for only $500 million could be majorly supportive of the further growth in this company going forward, especially if it becomes a household item. I think the numbers on that continue to be quite limited. The company has not been very candid and open about exactly how many subscriptions they're selling and how many mirrors, and haven't really been putting out growth projections out too much for that. So there are elements of surprise that could come from that acquisition. So that's the part that I'm most focused on. Interesting chart, also perfect bounce off the trend support. So looking forward to it.
Yep. And then lastly, so last week I talked about an under the radar med tech company called Exogen, which I then profiled in Weekend Research along with two other essentially under the radar small cap, micro cap med tech names. And this morning I have another under the radar med tech name, and that's called Myomo. Ticker is MYO. This is a wearable medical robot. Mary Yankee Oscar.
Okay. Wow, this one? Okay.
Yeah, it looked a lot better on stock charts when I was looking at it.
Yeah, hold on a second. Go ahead.
Anyway, so this is a wearable medical robotics company. Its main product is called MYO Pro, and it's designed to support the arm of those suffering from stroke, traumatic brain or spinal cord injury, ALS, or other neuromuscular disease or injury. Now, I do plan on doing a homepage write-up on this, but some of the key takeaways from some of the notes that I've read. First of all, Q3 sales growth was up 218%. The company's pipeline and backlog continued to grow due to its shift to direct billing. Since shifting to direct billing efforts, the MYO Pro ASP has increased from approximately 22,000 to approximately 35,000. Colliers Securities was out with an industry note last month saying, since MYO Pro is a custom fabricated technology, management continues to lobby the CMS to be classified separate from DME rental products such as wheelchairs and oxygen tanks, and they anticipate some sort of update sometime in 2021. But for now, Medicare Advantage, private payers, and the VA will keep the company plenty busy. And lastly, the company next week is going to be presenting at the H.C. Wainwright Virtual BioConnect Conference, which runs from, I think, Monday to Thursday. I'm not sure which date they'll be presenting, but it will be taking place next week. So I'll have more thoughts on this on the homepage.
Interesting one. Off the radar, right? So
Yep.
I had never heard of it, and so this will be a very interesting. It's a very small company.
Yeah, definitely.
So this is one of the things about the small companies like this is just be mindful of that they usually don't have a lot of liquidity, and I think less than 100,000 shares trade in this, about 123,000 actually daily share volume, which is not that bad.
Mm-hmm.
But this is going into the micro cap here, just to let you know. This is $33 million company. That's it.
Yes.
But it has top line revenue growth of 64% year over year. And so if there is a product mix over there that has significant re-rating potential, then this is the kind of stuff that gets from single digits to mid-teens, and the mid-teens to 30s and 40s rather very, very quickly. So looking forward to exactly what you discover in your write-up.
Yep.
So looking forward to it. All right, great stuff. Chronicle.
Good morning. Two things today. First off, very quickly, Beyond Meat caught a downgrade this morning from Piper Sandler. From what I can see in the note, it's really nothing new versus what we've been saying about the company recently. There is a massive there's a massive view now that the company continues to miss estimates, not just for Q4 but also through 2021. And they're losing competitiveness against Impossible Foods, who is now looking to decrease their prices by 15% to US distributors. And that's the gist of the note. So if anyone's looking for shorts, I believe we're short common, and we continue to be bearish. One thing we've been noticing as well is that whenever the company puts out press releases about expansions into China, that's no longer having a big effect on the stock as it used to. Like these days, we're noticing it's only good for a couple percent in the stock before fading. So they've played that China card too many times now, and the market has stopped caring basically. And Maybe it's also because the retail crowd is more interested in other stocks these days and Beyond Meat is becoming forgotten. Maybe they should announce that they're converting their assets into Bitcoin or something. I don't know. So that's the first item.
I'll just quickly mention this that first of all, I remain short, and I believe, and I've been bearish on this one ever since more than for a long time, but I've gone in and out of the position. So right now I have an open position. I'm short, and I think this thing is going to cut in half. Is going to get cut in half one of these days, and this $120 support is not going to hold for too long. You see, the thing is, this company it still trades at 20 sometimes sales, and for those who continue to go on this idea that this is that plant-based food is a growth market and it's a niche category and long runaway ahead and all of this, they just missed the biggest point. And the biggest point is that the barriers to entry in this business are ridiculously low. You can make a plant-based food from your kitchen. Anybody can. It's not hard. This is not rocket science. That's the first thing. And the second thing is that this company's growth rate has completely been destroyed. What you used in the last time, the reason why the stock crashed so big in November is because the street was estimating a 40% year-over-year growth rate, and the company posted low single-digit percentage growth rate. Way off the expectations, and so the stock got absolutely destroyed at that particular time and hasn't been really able to recover since then. And now, to your point, based on this downgrade this morning, they're cutting prices by what, 15% to be able to sell more. I mean, if you were the leader in a space and if you commanded lion market share in your industry and you kept making this push that the penetration is low, why are you cutting prices? You don't ever see a leader cut prices essentially. So these are all the reasons why I believe that this does not deserve a 20 times sales valuation. And I think from here, this is still some significant amount of downside risk in this stock over time. So just my high level view there. Your second pick?
So on Monday, I mentioned that I shortlisted some stocks for an upcoming Jaguar Media video to take advantage of the education theme and the anticipated higher undergrad admissions intake for this year. And I want to talk this morning about the one that I've chosen not to go with, but I think it has upside potential nonetheless. The company is ZVO, symbol ZVO. To summarize the bull case here, this is a possible turnaround story, and there's potential here for a short squeeze as well. Now, what this company does is they provide digital education platforms for both educational institutions and students, and also remote learning platforms, mostly catered to the tertiary and professional levels. So for almost a decade, this company had been struggling with declining revenue because they were always on the periphery in terms of their offerings. Like, their solutions were never actually part of the universities. For example, they operate TutorMe and Full Stack, which are basically discretionary services that people pay for outside of their classes. So it wasn't exactly a great business. And then they're also used to be they also used to operate Ashford University, which, if you followed the news, you'll know that this is a for-profit online university, which had been heavily criticized by both the industry and the government because of alleged predatory practices and also the poor success rates of graduate employment. So that's the general background of why the company used to struggle. Now here's the bull case for a possible turnaround. So recently, back in August, that troublesome Ashford University business that I just talked about, ZVO sold that business, that entire business, to the University of Arizona for $1. And in exchange, the University of Arizona has revamped and rebranded that into what's known today as the University of Arizona Global Campus. I think I have it in one of my images, or UAGC in short. And going forward, this is going to be the U of A's online university arm. This is an international university, which means students can study from abroad. So this fits the theme of, the vast number of students who have put off their undergrad applications last year because of COVID, but they're going to have to come back at some point, and there's going to be a bumper crop of applications. And so remote education will still be more relevant than ever, rather than facing tough comparisons, which is the consensus view. Now, here's the kicker, Fahad. Under this agreement, ZVO is going to get roughly 20% of this new online university's revenues for the next 15 years, while providing tech support and marketing. And that should translate to about $220 million in revenue at a minimum. But more importantly, ZVO will also be free to take this online university management solution and pursue similar contracts with other universities and institutions going forward. So the message here is that the company is now in the midst of transforming from being an external discretionary service provider to now having its revenue directly tied to the universities themselves, which is logically going to result in more stable cash flows down the road. Now, turning to financials, this chart right here basically summarizes what I mean when I say that ZVO is potentially a turnaround story, given its transformation efforts. Like most recently for 3Q20, the company reported trailing 12-month gross profit growth for the first time in a decade. And we can see that revenue growth is also very close to inflecting positive. Now, looking ahead, management is guiding to high single-digit margins for 2021 and high single-digit revenue for the subsequent years, which is a massive improvement from what we've seen the last 10 years. And then lastly, if we look at the short interest, this stock has about 30% short volume ratio, probably because people are still looking at the past and they're not yet pivoting. So that's everything I have to say for the company. Again, this is the one I've chosen not to go with for the actual Jaguar Media video. And the reason is because this is still a bit on the speculative side, because even though the company has begun to lay out the foundations, they still have to prove that they can pursue more contracts. And so this is getting in a bit early now. And the UFA is currently facing a bit of social backlash for the transaction, although that's not really ZVO's problem anymore. So overall, this is like a show me situation right now.
Interesting update. The one part that I'm curious about is that the asset that they disposed of, the Ashford University to University of Arizona Global Campus, to which they're now going to be providing just marketing functions and collecting 15% royalties in exchange. I wonder what their margins would have been had they kept it together and just ran it themselves. Would they have been able to maintain 15% or more margins versus now where they are basically running an asset-light business and collecting royalties, and so the margins on this business are better this time. You see my point here, because net the sale, despite to some people that may have come across as weird that you sold your business for $1, it may actually end up being a better financial decision for the long term. I mean, given 15-year contract that they have now, than running it themselves. And if so, I wouldn't be surprised if they actually continue to move in that direction in the future as well. And that would be the potential catalyst for re-rating in the stock as well as a short squeeze. So just my high level view on that one. But otherwise, also technically, this looks fantastic. This is starting to break out from the base after a 4 or 5 months of basing formation. Likely goes to retest at least $7 per share, 650 to 7, which was the prior 52-week high. Volume is also climbing, MACD and RSI climbing higher. So interesting name. And let me know when you're ready to do your presentation, the next one on Jaguar Media for that other education tech. Whenever you're ready, we'll go at that point, okay?
Sounds good.
All right, folks, we're going to stop over here. That's it from us. We'll see you in the chat room shortly.